the reality is a lot of small business owners, especially in the agency space, found a business, are great at the technical elements or the creative elements, but aren't that great at the operating elements. And so they plateau and get stuck or get burned out. And so that creates a really compelling opportunity for savvy buyers in the space to have a massive array of these small to medium acquisition targets that are doing maybe a couple hundred grand of revenue up to maybe a million or two of revenue that hit almost this glass ceiling. There's a huge pile of those companies out there. And the bigger institutional private equity buyers and stuff are not looking at deals that size. But for business owners, it's a great space to find these easy bolt-on acquisitions. We showed an example of one in our last video. And so to me, that's one of the reasons I think agencies are just an incredible place to be playing from an acquisition standpoint right now. And that opportunity, I think to some extent will always exist, but it's uniquely, as people start doing more acquisitions, I think it diminishes over time. And so now's a really good window of time to be mastering the skill set and taking action on buying businesses in the agency space.
Hi, for those of you who don't know me, I'm Tom Shipley, CEO of Ava Agency Ventures Aggregator, serial entrepreneur, 18 acquisitions and exit, raised over $150 million in capital, and co-host of DealCon Agency and Brand CEO Summit in Nashville. I'm really excited to be here with my friend and co-host, Matt Bogner, talking about programmatic mergers and acquisitions.
Tom, I'm super excited to be here. For you guys who don't know me, my name's Matt Bodner. I'm a private equity investor. I've done more than $100 million worth of transactions, and I'm co-hosting the DealCon M&A Summit with Tom in Nashville this upcoming September. And we have been talking about the power of M&A and why buying businesses is such a great strategy to scale, to grow, to solve problems. And I want to talk about now specifically why I think the agency and the e-com brand worlds are such great places to be looking for acquisitions. And it's a little bit of a different dynamic or different reason for each of those sectors. But the punchline is I think both of them are really powerful places to play in M&A. And we're both to some extent active in those worlds from an M&A standpoint. And part of the reason we wanted DealCon to be focused on these sectors is because they're sectors where M&A both works really well and there's a lot of opportunity. And so from my perspective, let's start with agencies. Why are agencies a great place to be looking at M&A? There's a couple reasons. So one of the most obvious is if you look at the ecosystem of businesses, right, and we can take different industries. I'll give you a kind of a counter example. A close friend of mine is a dentist. He actually built and sold his dental practice for 8 figures, very successful. And he wanted to go back and start buying more dental clinics. Well, what's happened in the last 5, 10, 15 years in the dental space, you're starting to see in HVAC and other sectors, is massive private equity consolidation, like massive roll-ups where all these independent businesses are just getting scooped up really quickly. Well, the agency space, that hasn't happened yet, right? And there are certainly people doing aggregations of big PE firms buying stuff up, but the amount of companies in the space versus the amount of consolidation that's happened, there's still a huge greenfield in the agency world for potential acquisitions. And some of those things are just the fact that the PE, the evil PE overlords haven't gotten there yet. But part of it is really, I think, a structural element of the agency business and how it works. And by that, I mean, if you're thinking about who often founds or creates an agency, right? In most cases, it's often, not always, but often somebody who either has a really creative bent, right? They have kind of creative talent and they go out and they start helping a couple people and, then they hire somebody and suddenly they're doing, a couple $100 grand or $1 million or $2 million of revenue, or they're really good technically at some kind of marketing, whether it's paid media or SEO or whatever. Same thing. They start helping a few folks. Suddenly they're doing a couple $100 grand of revenue, a couple $1 million of revenue. But in a lot of cases, you'll see that person who's really technically gifted or really creatively gifted isn't necessarily a great business operator, right? And Michael Gerber's classic book, E-Myth Revisited, talks about that distinction between the owner and the manager and the technician. And the reality is a lot of small business owners, especially in the agency space, found a business, are great at the technical elements or the creative elements, but aren't that great at the operating elements. And so they plateau and get stuck or get burned out. And so that creates a really compelling opportunity for savvy buyers in the space to have a massive array of these small to medium acquisition targets that are doing maybe a couple hundred grand of revenue up to maybe a million or two of revenue that hit almost this glass ceiling. There's a huge pile of those companies out there. And the bigger institutional private equity buyers and stuff are not looking at deals that size. But for business owners, it's a great space to find these easy bolt-on acquisitions. We showed an example of one in our last video. And so to me, that's one of the reasons I think agencies are just an incredible place to be playing from an acquisition standpoint right now. And that opportunity, I think to some extent will always exist, but it's uniquely, as people start doing more acquisitions, I think it diminishes over time. And so now's a really good window of time to be mastering the skill set and taking action on buying businesses in the agency space. Tom, I'm curious what your perspective is on that too.
Yeah. So let me just draw a distinction, is that there is, for smaller agencies, it's not where private equity is going to play. There is a lot of investments from private equity into larger acquisitions. So when you have your EBITDA or your cash flow over $5 million a year, there's a lot of private equity backed agencies that are acquiring and rolling up those size agencies. The challenge is that there are so many, there's probably 100,000 agencies in the United States. The vast majority of those agencies are doing absolutely under 3 million in EBITDA. Vast majority are doing even under 2 million, and vast majority are doing under $1 million. And that's really the opportunity for private equity, because it just takes as much energy to acquire a bigger agency than a small one, but it's more difficult to do due diligence on it. So therefore, private equity has the cash, and they'll enjoy the higher benefit of buying at a certain. They might be paying 4 or 5 times for an agency with a $5 million EBITDA. But when they consolidate these agencies and they have a $30 million EBITDA agency, now suddenly they're trading at 8 to 12. So again, they're enjoying that world, and they can write bigger checks. But it creates the opportunity, and I'm seeing different ends of the spectrum as far as who's on the market right now selling. Imagine this. Do you know how many agency owners have owned their agencies, and we're seeing so many of them for 20 or 25 years? They started these agencies around when, Web 1.0 was happening, whether they're digital agencies or other. And so there's so many that are just retiring, and either they're going to find a buyer, or they're just going to eventually just wind down and close the doors. And that really becomes the interesting opportunity from an acquisition. And therefore, just going out and finding them, because there are sellers out there that are tired, that are just trying to figure out how do they leave? But their biggest concern about closing it down is their employees. Their employees have been there for 5, 10, 15, 20 years, and the thought of just deserting their clients and their employees, and they're looking for a solution. That's why acquisition. The thing I also love about the space is that in certain industries, when you want to acquire a business, you have to be paying, I know a number of businesses that you have to pay 80, 90% cash at close is what the deal is. In the agency world, because it's such a service, because of the competition, how many agencies are out there for sale, and where the market is you're not paying 80% at close. So you're creating deal structures on that. There's seller financing. There's so much flexibility there. And therefore, if you have your existing business, as I shared, that if you have an existing business, it is the most efficient use of your time to grow through acquisitions. There's so many ways you can leverage your balance sheet, and then by finding a good home in your agency is a perfect place to do. And that's why, as Matt went through the math, is for showing you about the accretive value as you start rolling up agencies, even one a year, what it's going to do to your business.
You're totally right, Tom. And if you look at agencies, it's not only that you don't have to come up necessarily with a massive amount of cash at close. It's also that another structural element of the agency business is that there's a lot of embedded opportunities for what I'll use the fancy term like operational synergies. And but the realistic way of looking at that is like if you look at certain industry categories, like if I'm rolling up dental studios, there's not really a meaningful opportunity for me to cross-sell my dental services from Milwaukee to Chicago, right? But if I'm buying an agency and I buy an SEO agency and I already own a paid media agency, there's a massive opportunity for me to cross-sell my products and services amongst my customer bases, right? So the companies have a lot of embedded value, and there's a meaningful opportunity to get on the same back office, HR, accounting, project management, all of these different things. And so you can not only have cost saving opportunities, but there's also tons of potential opportunity for cross-selling and upselling that just don't exist in some industries. And I think that dovetails into why e-commerce brands is another great place to be playing. We'll talk about some of the industry characteristics in a second, but to me, that business has a similar strategy and philosophy. And you've seen a lot of people approaching e-com aggregation, right, as a business strategy over the last 5 to 10 years. Well, there's a reason that that's the case, right? The back end infrastructure of a brand is very similar, almost regardless of what you're selling, right? I mean, it's not exactly analogous. And I know, Tom, you've been through the trenches on this more so than I have. But we have a couple businesses that do a decent amount of e-com business, but the back end infrastructure is you have purchasing, you've got somebody optimizing, whether it's Amazon or direct to consumer. You've got like the functional expertise are very similar, regardless of what product you're kind of swapping in and out. So you're almost adding, similar to the example you shared on our first conversation of how you bought a company, you already had a product, you bought a company, plugged your product into that infrastructure and scaled it to over 100 million in revenue. The same idea exists and makes ecom a great place to be playing, because if you have the shared infrastructure and the knowledge of how to use it, then it creates natural merger synergies where it's like, hey, we're great at XYZ. Let's buy some more products that either sell to a similar customer segment or are complementary, or we can leverage our purchasing relationships to get, costs down on these particular products or whatever. And so, I'll give you an example. We have a business that sells portable sinks, and believe it or not, Amazon and ecom is a big driver of that business. And we just got into another adjacent product category. We found a great supplier through some of our existing supply relationships. We were able to modify, do some work to make it kind of our own proprietary product, and we're taking it to market. And everybody else who's in the space are these old clunky industrial companies that have no idea how to sell on the internet, and we're going to eat their lunch. Right. And so it's a great strategy for like that. That's one of the reasons I think e-commerce is just a great place to be playing as well, just from a business structure standpoint. I'm curious, Tom, I mean, you've been in those trenches even more so than I have. What's your perspective on e-com and some of the opportunities there, and why you think it's a great place to be doing acquisitions?
So I'll start with this: is imagine you created a business off of a primary one product that was a hero product, and you put some cross-sell products around it. And that hero product is just screaming just doing so incredibly well. What I can promise you is that almost every single product has its life cycle and will eventually fizzle. Either you're big enough, the population of the United States has bought the product and they don't need, again, your addressable market for that, your target addressable market for that product, you've capped out on, and it gets more and more expensive to acquire customers. And from efficiency, you can't continue marketing to them. Most people wait till they see their revenue dropping before they start to panic and they start to throw off and start generating other products. But then they start investing heavy into additional products, and they hire product development people. They bring on a product development person. They're spinning them up. But the amount of money you have to invest to create the inertia to create other strong sellers with the risk. And meanwhile, based on minimum order quantity, your warehouse is filling up with these products. And even if you're successful, we had a brand that we launched and it was successful from day one. And we got it up to between 35 and 40 million in revenue within 2.5 years. But understand that it ate $7 million in cash between inventory, receivables, and everything we had. Even though it was profitable, we had $7 million locked up in that business on the balance sheet. Do you know how many businesses we could have actually gone on and acquired that had the velocity? Because there's so many brand owners that they get to a certain point and they don't know how to grow it. We, who had the experience growing brands to over $100 million, with the infrastructure, the team to do it, it was most, I'm going to say, brand owners have the hubris that they could always just keep on creating more products internally. And while Amazon, there's a formula on how you can keep creating some cross-sell products, hero products is tough. And the best way and the most assured way that you can continue to grow your business and tangentially. And imagine that, let's say that you're in a certain sector. I was trying to come up with an example, but you're in a certain sector of the marketplace, and I'm in the ring light business, okay? And I have a killer Amazon business, and I'm the number one seller in my category on ring lights, okay? Which is great. But I'm just purely Amazon. Well, imagine if I find a similar type of product that I can cross-sell to my customers that I can launch on Amazon, but that business is big in income. Now I can put my ring light business on their platform, and I have an additional platform. And maybe they're really great at TikTok, and TikTok Shops is how they're monetizing their business. I can take their business, put it on what we're great on Amazon, and I take my business and use TikTok and TikTok Shops with their expertise, and I bought that expertise. That's the power. So not only you get that revenue and the multiple arbitrage, meaning that by combining the companies, we trade at a higher level when we sell, so we increase your enterprise value, but it's the capability and the capacity that you actually gain and the increase in channels. And therefore, what I want every product brand owner to think about is what is the most efficient use of your capital and time.
I think the story of tying $7 million up, right? I mean, and maybe it's not that extreme an example, but it's so easy to start spending a bunch of money on R&D and hoping that a product is maybe going to work. If you have the expertise and the relationships, either on the customer acquisition side, on the marketing side, on the purchasing side, wherever those skill sets are, figuring out how to buy products that you can leverage and plug into those existing expertise and existing channels can unlock a tremendous amount of value and often be a much better use of capital or a faster path than the old school way of doing it. And if you've never been exposed to the idea that, hey, you can buy some of this stuff instead of just always having to build it, it's a really powerful growth strategy. I also think we've talked a bunch about the structural elements of e-commerce brands, but there's also some industry characteristics, to me at least, that make that sector really interesting. And I think similar to the agency world, there's a ton of entrepreneurs and small brands that are below the radar, below the cloud cover of where the big PE buyers will even kind of peek their head in and look for opportunities. And there's just so many of these small businesses that in a lot of cases too, you can find either founders who are stuck or plateaued. They had a great product idea, but they're not really great at scaling or purchasing or inventory. And e-commerce especially can be tricky to manage your cash flow. All of those things can factor together to create a really fertile ground for acquisition opportunities. And so I think both e-com and agencies just, to me, have both great industry characteristics that favor buying businesses as a really powerful growth strategy. But I think they also both have really good business characteristics about sort of the way those businesses are structured and operate that make it a really powerful potential strategy for growth.
We're going to talk in another session, Matt, which is something that you and I love to talk about, which is the buyer mentality and the seller mentality, and how the challenge is that everyone thinks that you think like they think like you, and they don't. And I'll give a classic example is that when we at Atlantic Coast Brands, the brands that had the biggest oxygen were our largest brands. They got our focus, they got our creative team. The smaller brands had to survive or they would die on the vine. And we had one little brand, it was a $5 million skincare brand. We didn't have the bandwidth, energy, or focus, and we couldn't afford, based on the margins, to even hire a brand manager to actually grow that, and we didn't want to invest in it. So basically, we ended up saying, okay, who wants to buy this brand? And what we'll do is, if someone will just take over the inventory and buy through the inventory, and as they sell through, send us checks for it with a little bit of extra margin on it, great. And again, we were happy we found someone that did that. And that was our goal, was just to get this so we could focus on our biggest brands and get rid of it.
And I think that's a great analogy. If you're in the space, occasionally you're going to just organically see opportunities like that. But if you're thoughtful about it and you actually have a programmatic strategy to just not only just say, hey, if I get an acquisition opportunity, cool, great. Well, what if you put a plan in place and a playbook to say, I'm going to go out and find these opportunities repeatedly, and I'm going to build a pipeline of them for myself? You can really start to unlock a lot of upside and a lot of potential deals. And I know we've gone deep in about why we think agency and e-com are great places to play. In our next video, we're going to talk all about deal flow, how to find these opportunities, not just when they come to you, which is great, but how to do it in a programmatic and a systematic way, because it can really transform the game of M&A once you know how to find the deals. And that's what we're going to jump into in our next conversation.
And I promise you it's going to be fun. So as a reminder, going back to what we said at the very beginning, is it's not about the who, it's not about the how, it's knowing the who. And as CEOs, we have the responsibilities to figure out how to compress time. What we want to do is, if you want to learn how to do M&A and learn our playbook and basically spend time for 3 days with some of the biggest thought leaders that you couldn't even pay, and if you did, it would cost you thousands of dollars an hour, and hang out with them, join us, have a lot of fun. September 23rd through 25th in Nashville. The URL, if you want to check it out, is www.dealconlive.com. That's short for dealconferencelive.com. www.dealconlive.com. And we hope to see you in Nashville.
Come hang out with me and Tom. We're going to talk about buying businesses, and we're going to have a room of max 100 agency and brand owners to teach them the exact playbook and show them how they can do it too.
Thanks, Matt.